Maybe now. Here we are.
Yep.
Okay, we're good. Anyway, great to be here with all of you. It's so exciting to be at Korea Blockchain Week at the Impact event with 12,000 people at what is definitely the most exciting event in the world. We just heard some incredible conversations about kind of the state of things here in South Korea, some companies that are innovating and making a big difference across Southeast Asia and, in fact, across the continent. But we're changing topics right now to discuss something that is going to have an impact here in South Korea and all over the world. And we have to cross an ocean to do so. So joining me are three of the world experts on what's happening in the United States. There's been a major shift in policy and in regulation in the last year. We're going to discuss what that means, where we came from, and kind of what the future might look like. So I'm going to let each of these panelists quickly introduce themselves, starting with you, Yesha.
안녕하세요, 여러분. It's so wonderful to get to be here in Korea. Such a pleasure and a privilege. My name is Yesha Yadav. I'm a professor of law, and I specialize in market structure. And that really is what crypto is all about, building a new market structure for the future. So it's just the place to be right now.
Wonderful.
Thank you, Yesha, and you should have warned us that you were going to open up with speaking Korean. Makes us all look bad. I'm Brian Whitehurst, Global Head of Regulatory Affairs and Chief of Staff at Liberty City Ventures. I've been there for about 4 years. Prior to that, I spent 12 years at the New York Attorney General's office doing securities and commodities fraud litigation, the last 5 of which were all in the crypto space. And I worked a lot with the SEC, the CFTC, DOJ, and other global regulators in the space for
So to be very clear, he was the one going after crypto companies. It's very important.
at one point in time.
Yes, he was.
Good afternoon, all. My name is Miller with the Solana Policy Institute. I've been working on crypto policy in the U.S. for going on 9 years now, so I've had the whole range of policy directed at the industry over that time, and excited to be here.
Wonderful. Well, Miller, we're going to be starting with you. Because it's time to take a look back so long ago, back before early November 2024, when we had a different president, we had a different SEC, we had a different CFTC, we had a different House and Senate even. What was that world like? What was it like to be a crypto company back then? Can you kind of walk us through the history?
Yes, I think there have really been 3 general periods of policymakers' approach to crypto in the United States. Prior to Libra, remember Libra, the Facebook stablecoin way back in the day? Policymakers didn't care about crypto. Like, if anyone said the word crypto, we would text each other excitedly because it was such a big deal. So I call that period the period of benign neglect. It was just one of those folks doing with their little internet tokens, and hope they're having fun with them. Then the last administration, really, it started, I would say, late 2021, and then in earnest in 2022. I think they adopted a whole-of-government approach to try to kill the industry in the United States.
Well, worth noting, and please continue with your history, but it's important to see the context here. Crypto in 2021 spiked, and as you all may remember, in 2021 we saw Bitcoin price hit $65,000 or so dollars, and suddenly the public was interested, and so maybe too was the government?
So too was the government, and some terrible things happened in 2022 in the crypto markets that soured a lot of people's impression of the technology and industry. Terra Luna being a good example, FTX being another example that I know has been had a long tail.
Well, so then tell us, maybe, Yesha, why don't you go into it a little bit? We're in this 3rd period of crypto history here. We're talking about the Biden administration. What was their stance on it, on crypto, bluntly?
David, it's a great question. The stance on crypto was that this is a risky and dangerous technology, and that consumers needed to be kept safe from it, and also that the financial system needed to be kept safe from it. So many of you may have heard about a policy called regulation by enforcement. And what that meant was that regulators would bring cases, they would bring litigation to try and put existing rules on new crypto technologies. And so what that meant was 2 things. One, crypto companies were facing constant litigation threat. Now, in Chair Gensler's time, Gary Gensler, the chair of the SEC, approximately 125 cases were brought between 2021 and 2025, compared to just 70 cases for Chairman Clayton before that. Penalties for Gary Gensler's time, Chair Gensler's time, were $6 billion compared to $1 billion in the previous administration. So clearly there was a lot of enforcement activity, but that had two things. One, crypto companies were scared to do business. Number two, they did not get access to infrastructure because the financial system was supposed to be kept safe from crypto.
I mean, you couldn't even get a bank account.
Exactly. So banks could not provide services, custodian, or even basic banking services. And so what that meant, of course, was that crypto companies were scared to build. Many of them decided to go abroad. And at the same time, those that stayed, or even those that were abroad in some cases, were facing constant litigation threats.
So, Brian, you were in government for part of this, and then you made the move to become a venture capitalist, very often focusing on the digital asset industry. How are you counseling some of your portfolio companies during the last administration?
I mean, it was a stark contrast from when I was regulating the industry from 2017 to 2021 and into 2022. And it was a period why I actually left regulation because I disagreed with the stance that both New York State took and the federal government of rather than actually looking for fraud and really what is harming the customers to becoming a registration-based like legal system of if you do not register with us, then you're not going to be able to do business and we're going to sue you and take you down. That used to never be how the SEC functioned, how state regulators functioned for the most part. And so over that course of time, from 2022 up until the Trump administration, it was very much telling portfolio companies like, be careful with where we're at. Luckily at Liberty City, we don't do a lot of token investments, or actually we do no token investments. It's all equity. So our company base is not really living in that world. But even still, they had to be careful just because they were guilty by association. And they could, at any point in time, like have their bank accounts closed or greatly affected by bank accounts being closed because of their bank's association with crypto like Silvergate and Silicon Valley and things of the sort. So it was a tense time.
I mean, at the end of the day, wasn't it true, Miller, that companies were simply building offshore vehicles, domiciling elsewhere, and maybe even sending employees overseas to ensure that they weren't considered too American?
That's 100% right. A ton of founders moved overseas to start their companies abroad because they were afraid of doing so in the U.S. And then there were certain business lines that folks could only do from overseas. And so there was a mass exodus of the industry from the U.S.
I will say, though, it was happening. People were going overseas even prior to Gensler. Like, that's reality, because the rules were just not in place. And so it was hard to understand, and there was no real communication from the SEC or the CFTC on how to find a path forward.
Right. So when you mentioned registration earlier, was there effectively any pathway to registration, for example, for digital asset exchanges? Because as far as I know, 0 pre-existing exchanges were approved at all by U.S. regulators just before Trump was reelected.
Well, I mean, like Coinbase, some exchanges were registered with New York DFS, one of our sister agencies in New York State, but at the federal level, no. Ironically, BlockFi reached a settlement.
So BlockFi was a lending company.
Yeah, it was one of the big blow-ups amongst like Celsius and Terra Luna and FTX. But they, previous to kind of going bankrupt, they settled with the SEC in the 50 states, and part of that settlement was to find a pathway to registration for their products. And that is typically how it works in the US. If you're not registered, you go engage in conversation, you pay a fine, and then you find a path to registration. But there was no follow-up for BlockFi. There was no way for them to know what they needed to do.
And where's BlockFi today?
Nothing.
Dead. Okay, well, that was then. That was history, ancient history. That was 2024. And then in November, a man who had asked the crypto industry to donate to his campaign was elected president of the United States again. What's changed, Yesha?
I think a number of things have changed. First and foremost, at the federal level, that means at the level of the federal government, there has been a massive de-risking. So as we just discussed, there were a lot of cases, a lot of litigation being brought. Banks could not provide services to crypto companies. All that has changed. So enforcement activity against crypto companies that is basically at the federal level essentially disappeared for the most part. In addition, banks are now allowed to give services to crypto companies as well as to engage in crypto activities now themselves. So that's a big, big change. But perhaps the most fundamental change now, arguably the biggest one from all of our standpoints, is the desire to make rules. So instead of having enforcement, it's now all about legislation. So one piece of legislation, the Genius Act for stablecoins, that, as many of you know, has just passed. And right now, there's a massive effort at the federal level to pass one big piece of legislation to oversee all of crypto market structure. So, the big change, I think, from our perspective is a huge emphasis on creating legislative guardrails that can provide clarity and certainty for the crypto community.
And that started like day one. There was a day one or day two executive order from the president, Miller, that made crypto a national priority for the United States instead of either an afterthought or else, I guess, what was that, version 1 of your history?
Benign neglect.
Benign neglect?
That's right. It's been a complete 180. The agencies are going absolutely nuts trying to write as many rules as quickly as possible. So, folks,
and what's that like? I mean, what does that process look like? I mean, is it even doable in time, so to speak?
I think it's going to be a challenge to do it in the remaining 3.5 years that we have. It is a several-year process, at least through the federal agencies, how rules get written. They publish proposals for public comment. There's back and forth. People can sue over it after, and then if it survives that gauntlet, it becomes law. So usually that takes 2 or 3 years. I think that, particularly at the SEC, it is hard to over-appreciate the ambition of their agenda. It really is, I think, a goal of remaking capital markets and allowing them to function on crypto rails. So I am very excited. I do think that we all have ambitious agendas, and there's backlog, to your point, of rulemaking, understanding, learning that needs to happen that wasn't possible over the last 4 years.
Well, some stuff's already happened, right? There's been some low-hanging fruit that essentially has been plucked. For example, to your point, banks are now allowed to custody crypto assets. Maybe we can talk a little bit about kind of some of those low-hanging fruit that have been enacted so far.
I mean, the low-hanging fruit here is repealing certain pieces of rulemaking. There was one called SAB 121 that made it super expensive for banks and other regulated financial entities to provide basic custody and other services. So all of that is gone. In addition, of course, we have the Genius Act for stablecoins. So stablecoins is a target that we can look at and say, let's make rules for that. But we do need a larger framework, and we do need that. You can't have stablecoins without the larger market structure around that to hold the stablecoins.
Let's define
right?
some terms here, because that word market structure sounds like it's simple, but it's really not.
It's really not. It's all about defining what the tokens are as in their legal category. Are these securities, commodities, some other category? Who is going to be able to trade them, and will they need to be registered? What kind of rules will that require? And very importantly, which U.S. regulatory agency will watch over these different projects?
And that's important because in the United States, unlike in some other countries, the regulator for commodities is different than the regulator for securities.
Absolutely. So all of that conversation is currently pending. So we've reached some small goals. Genius Act is actually a big goal. But the largest goal here is market structure, and that is definitely a waiting game.
So do you think market structure can pass?
I mean, yes, it can pass. It's a matter of when. And Miller touched on this. Like the U.S., I mean, for as great as the federal framework is, it is very, very difficult to get any legislation passed. It has to work through both houses of Congress. It has to come out of like the committees within it, the subcommittees, and then both the Senate and the House have to agree on the exact wording. So it is a long, long process. Now, the Trump administration has put in this, goal to have a market structure bill marked up by, I think, next Tuesday. Doubt it's going to happen. Stranger things have happened, but it could. Hopefully by the end of the year, there's potentially something done. But then the issue becomes a political issue in the U.S. because you then go into next year and we have our midterm elections in the United States. And unfortunately, Washington, D.C. shuts down at that point, and very little legislation ever gets passed because everyone is at home running and trying to get reelected, and they don't want to pass any legislation.
When we say everyone, we mean the actual congresspersons.
Yeah. The Congress people, senators, congressmen are at home in their districts running, and they don't want to pass any major legislation that might affect their ability to get voted into the.
What a great system the United States has, right?
So one quick thing to add there is September 30th. That's a funding deadline for the U.S. government, and if that doesn't get met, then government shuts down. So even until September 30th to the end of the year that Brian is mentioning, there might not actually be functioning federal government to be able to go through and discuss the legislation. So when we're discussing dysfunctional, this is getting to that point.
But I will say, I was very surprised by how quickly the Genius Act was able to get passed once they kind of put their minds to it.
And there was some bipartisan support. It's worth noting that both Democrats and Republicans supported some sort of rules for the road when it came to stablecoins. No, Miller?
That's right. Bipartisan supermajorities in both the House and Senate passed that bill, so I think it'll be around for 100 years. I do think getting Genius done is a huge deal. I don't want people to underappreciate I think 3 bills total have been signed into law this year, period.
For any subject.
One is Genius. Then we have this massive.
The U.S. has passed 3
bill.
bills this year, and one's crypto.
So it's a big deal, and I think the first stablecoin regulatory bill was introduced in maybe 2019. So these things, gestate and grow for several years before they get passed into law.
But I mean, market structure, various bills have been around now for a number of years. So we're not starting at ground zero. And actually, under the Biden administration, or the last term in the House, they did pass a market structure bill. It just never went anywhere.
Well, everyone knew that was going to happen when they passed it, right? So, okay, what does that mean in the meantime? So, if I'm not mistaken, we're seeing companies wrap themselves in American flags and repatriate. We're seeing fundraising happen in the United States. We've seen digital asset treasuries trading on United States stock exchanges. We've seen new structured products, investment banks inventing brand new things that include digital assets. We've seen ICOs, or at least a reemergence of some of those in the United States, and tokens launching in the U.S. Are there going to be any enforcement actions, Yesha?
Absolutely there will, and they already are, just not at the federal level. So there's a lot of pickup from the 50 states. So as you know, the U.S. has the federal structure, which is the federal government at the top, and then the states are also very independent in their ability to bring legal actions. And so many states, for example, Oregon and Texas, they have brought cases against crypto companies. Stepping in, they argue in place of the federal government to bring many of these cases, including against Coinbase, for much of the same facts that the federal government had brought their case against Coinbase. So, crypto companies may think they're out of the woods, but they should think again, because in fact, the states are actually ramping up activities that can prevent some of this.
And Brian, you've got a comment about that.
Yeah, I mean, again, going back to what I said earlier, yes, they are picking up these actions, but they are, again, registration actions. Even when the SEC, they had their case against Coinbase, Binance, and one other, Kraken, I believe. And I think in total there were 28 claims of action in those court cases combined. Only one of those claims was an actual fraud claim. The rest of them were all registration claims. So really, if the faster the federal government moves to finding a path to registration, then all of these issues are going to go away. Now, and I think it gets back to states and the federal government to finding fraud in the marketplace. And ultimately, that is what I think all states and the federal government should be focusing on, is making sure that people are not being manipulated, or they are not being susceptible to fraud. There's not self-dealing, there's not insider trading. These are the things that are important. And while the states are picking it up, it's a long path for them because really their arguments are kind of limited.
Well, it seems to me, it seems to probably every member of this audience, that we do need to make sure that investors are protected from fraud. And certainly there has been fraud perpetrated in the crypto industry before. There's no question about it. All of us have seen that from the inside too. But some of these agencies don't seem to fully have their act together. Our understanding is that even like the CFTC, which regulates commodities and futures trading, they don't necessarily have the leadership today. Is there any information that we have on kind of whether or not there's going to be a confirmation at the chair of the CFTC? Miller?
We don't have any new information there. The current nominee is a gentleman named Brian Quintens, who knows the industry very well and has been at the commission before. But yes, currently there is one
vacancy.
commissioner out of, and there's supposed to be 5 at this agency. So it's running on fumes a bit.
But, sorry. You want to say
I was
something?
going to say, one thing to clarify, the CFTC, which they do have some regulatory oversight right now, but they are typically a much smaller agency in the United States. And right now, they're not probably equipped from the funding to be able to handle the entire industry like they potentially might. So even when they get, it's just going to be assumed that they're going to be the main oversight for this industry. But with that is going to have to come with new funding and a staff up completely to be able to regulate this market in the way it needs to be regulated.
Can I just complain? I just want to complain. I just need 2 minutes to complain, which
Sure.
is that the longer we wait, I know, probably 20, but the longer we wait, the more people, everyday people like you in the room, are exposed potentially to bad actors that take away attention from the good ones, that take away money from the good ones, that take away the ability for good ones to compete because the bad ones are coming in there and being more sexy and inviting. And unfortunately, the lack of regulation in this space means that what ends up happening is that companies go bust and the bankruptcy courts have to pick up the slack, which means consumers like you end up in bankruptcy courts, usually at the back of the line to get paid, and that means that nobody wins and everybody loses, and especially the industry, because people lose faith in its ability to deliver.
Well, we've had many moments where people have lost faith in crypto before. I can tell you I've seen the words Bitcoin is dead umpteen times over the last 11 years, and it isn't dead yet. Anyway, let's change subjects for just a moment and talk about some of the other things that Donald Trump promised as he was a candidate. He talked about a strategic reserve for crypto. Miller, has it happened yet?
No, and I hope it doesn't, but that's just my personal opinion, that the government should not be spending taxpayer dollars to buy crypto.
But what if we already have it?
Exactly. So what they're doing is, to the extent the U.S. government gets its hands on Bitcoin or on other crypto, it doesn't sell them anymore. It just holds on to them, and that's what they're calling the strategic reserve and the digital assets stockpile.
Yeah, I mean, I think this is a huge misnomer and I got calls from people in other countries being like, "Oh, we need to set this up because the U.S. is going to have one." They're not. Yes, it could happen theoretically in some future point in time, but it takes congressional action. Again, a very long process, and the laws, literally changing the law in order to create a strategic reserve to give the federal government the ability to go out and buy in the market and hold and keep. Now, as Miller was saying, there's a whole process. So, when the U.S. Seizes assets, or they get
Which the Marshal Service does.
Everything goes to the U.S. Marshal Service, another agency in the U.S., and they hold it. And they wait for courts to tell them what to do. And sometimes it has to go back to victims. Sometimes it goes here. Sometimes they sell it and then keep the profits, whatever. So the little bit amount that they're able to keep and that they would usually auction off is now just being kept in their wallets.
So you heard it here. The United States is slowly but surely stockpiling crypto. That's, I think, the message you take away from this.
I think one of the challenges as well of having the U.S. become such a big Bitcoin holder is that the geopolitical implications then start to become more risky. In other words, does it expose the Bitcoin blockchain to potentially being hacked by other state actors that are not friendly to the US in order to diminish the US's strategic reserves. So there are all of these other considerations that also open up that have been put forward as a pushback against the strategic reserve.
By the way, that's one of the most fascinating things I've heard all week. But unless they can hack SHA-256, I'm pretty sure the Bitcoin network will be safe. But that's just the Bitcoin maxi and me talking. Anyway, thank you, panelists. This has been wonderful. Thank you, audience, for being here and for the exciting opportunity to be at Korea Blockchain Week with 12,000 people. Thanks, everybody.
Thank you.